Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. I'm going to jump right into on-chain analysis here for Bitcoin and Ethereum. Not too much going on the news front side of things. Still have talks of restructuring, regulation, mergers and acquisitions, all that's very active. But as far as prices are concerned and coins are concerned, hasn't shown to be particularly relevant. If we look at Bitcoin's transactions per day here, they've really been on the decline since 2019. But it's important to know that this isn't really the full picture because you can send multiple outputs per transaction. You can use the Lightning Network, which is layer 2. These things didn't exist to the degree they do now, let's say in 2017, when the scaling debate really picked up. Fees got really high. There weren't alternative methods. There weren't batching transactions, SegWit. It's a much different chain in that sense when you're looking at the on-chain activity, so it's important to keep that in mind. And really why for Bitcoin, I tend to prefer active addresses. These are addresses that have changed in value over the previous day. We did get a new all-time high in active address activity, which was basically the all-time high in price. On-chain activity does tend to go hand in hand with price. And we've seen really a decline in active address activity since mid-2021 into present day. On balance, we really haven't seen that turn the corner trend-wise as far as on-chain activity is concerned. Really what you want to see on the bullish side of things is a rise in on-chain activity with price or a rise in on-chain activity as price is falling, because then that hints to a divergence in activity versus price, and there's a mismatch, and that typically gets corrected should on-chain activity remain considerable. I mean, one way to think about that in a deeper sense was 2020. We saw what effectively was rising on-chain activity during a flat price environment, and that's typically one good tip-off among many other things, but it's one thing to look at when we're trying to figure out if there's a bias in the market, one way or the other. So currently, as we stand, again, nothing too complex here. We can zoom out a little bit and go 30-day active addresses. There's still a relatively small but declining active address activity, which is what you'd expect for declining price activity. Hash rate, which is a measure of mining power on the chain, which is basically a direct measure of ASICs on the chain or compute on the chain, has also declined in a volatile way since May 6th or thereabouts, early May. Some of this has to do with more efficient ASICs or miners coming online, replacing those that are inefficient. Some of this has to do with declining mining profitability as price declines. And some of this has to do with a lot of the miners in Texas having to turn off their rigs because of grid concerns. Specifically, it's called curtailment, where the miners have basically united in this coalition and said, look, we know why we're here and how we benefit the grid, and we are going to agree to these unofficial rules where even though our profitability is declining in these environments, we aren't destroying the grid in the process. Typically in bear markets, we do see deep declines in hash rate. Really the most notable was this one in 2018. You typically don't see a bottom in price until you see bottoms in hash rate historically. I mean, this is all small sample size, but typically, again, these things go hand in hand, just as we saw this large decline in hash rate in May, June, July 2021, when the Chinese miner exodus occurred. We really didn't see a bottom in price until after that. So there are certain market participants paying close attention to what's going on here with hash rate. And it's a little bit muddy again because of that Texas situation, where these aren't necessarily miners that don't want to be mining. These are miners that don't want to destroy the grid in Texas in the process and are able to turn things on and off at a whim and keep the grid stable. Looking at balances on exchanges, this is all the centralized exchanges, Coinbase, Kraken, Binance, FTX, some other smaller exchanges as well. We can see that Bitcoin on exchanges has continued to decline. Again, in kind of a volatile fashion, you're seeing coins coming and going in a relatively unusual manner in that we're seeing really high deposits or withdrawals. Some of this could be data error. You always have to be careful when we're looking at on-chain activity or exchange wallets Are we sure those are exchange wallets? Does this get fixed when we're more sure later on, right? But as of now, we're still seeing declines in BTC sitting on exchanges, which some people interpret as float available. So again, there's a bit of a mismatch here between price and balances on exchanges, which are at levels not seen since 2018. Another thing when we're talking about supply is the MVRV. So we're looking at market cap versus realized value, which is the average value of all the coins that have moved. What is their price? What is their cost basis? Historically, when market cap is several multiples above that cost basis, we've typically reached an interim top in price. And you can see that in these peaks here. And the inverse is also true, basically the environment we're in now, where the cost basis is at or above market value. So people are underwater here, or were. You can see we're slowly pulling out of this zone at break even. Historically, we've held within this zone 3 months, 6 months. Typically, it's at least a quarter, aside from COVID. Again, we don't have 50 years of data here. We're looking at data from 2012. But before this metric even existed, that principle was obeyed, you could say, in 2015, where the lows in price did match lows in this metric. So it makes sense we're sitting where we're sitting, but I think it's also just too early to know, if we're going to dip back into that zone again. But it's a good sign that we're closer to the bottom than the top, certainly, based on that metric. Bitcoin's Lightning Network is a layer 2 solution. Again, when we're talking about transactions, I don't have a direct way, nor does anybody, of measuring how many transactions occur on Lightning. But one thing you can look at as far as activity is network capacity as measured in Bitcoin. And the Lightning Network acts much like a debit card system, where you can only transact as much as you have on the chain. So the idea is that if you're looking at Bitcoin deposits rising, you're seeing general activity rising as well. So this is certainly divergent from price. We aren't seeing Lightning Network BTC getting pulled from Lightning because prices are falling. If anything, more and more BTC is being deposited to Lightning. So this is a good sign for layer 2 activity picking up. And going back to the transactions discussion, we may never see Bitcoin transactions on chain surpass what they did in 2017 because of the current scaling solutions. And again, transactions don't tell you much in Bitcoin's case because you have so many other ways to transact and more complex ways to transact as well. Flipping gears to ETH. Now for ETH, I prefer transactions versus active addresses. And in ETH's case, we did see a decline in on-chain activity, basically from the top to effectively what is currently the local bottom in price. And we did see a decently sized jump in active transactions over the past couple weeks. I think on balance, trend-wise, we're still flat or down since those highs. But what we want to see now is a month-over-month rise in on-chain activity, irrespective of price. At the end of the day, most of this stuff, being digital assets, is heavily influenced by on-chain activity. It isn't the Bible, doesn't tell you everything. It isn't the Constitution, but it does give you some idea where prices are going just based on on-chain activity. Now we can look at active addresses, which are also fairly high for ETH, around 400,000. When we're talking about transactions, we're talking about 1 million plus transactions on chain on average per day. Active addresses rising as well with price over the past few weeks. But again, the trend is essentially flattened down. There isn't this week over week, month over month trend emerging just yet on chain. Looking at ETH's hash rate, ETH is a little bit different than Bitcoin in that they are switching from proof of work to proof of stake likely by the end of the year, which means all of this hash rate has to go somewhere else because it can no longer mine on Ethereum. And it had been falling quite rapidly from the top here as this merge, as it's called, this protocol change, gets closer and closer and closer. But it has started to pick up again with price. But I do expect this generally to trend down as the proof of work to proof of stake shift happens, likely by the end of the year. Looking at ETH on exchanges now, also just probably the best example of this dichotomy. We have ICOs in 2017 just gobbling up all this ETH. ICO festival ends in early 2018, a lot of that ETH comes back to the exchanges and price goes down. I mean, this is just a really good example of the expectations for the supply shift from sort of one narrative to the next. Since 2020, mid 2020, when that level topped out, prices in general had been rising, and exchanges holding ETH or ETH on exchanges is still declining. That's because you can put it to work in DeFi or anywhere else that's not just sitting on an exchange. So that still makes sense as far as narratives are concerned. And we're not seeing this rapid rise in ETH back to exchanges just yet. It's sitting in staking vehicles, it's sitting in DeFi yield vehicles, doing things that aren't just sitting on an exchange. And that's why you're continuing to see this decline since mid 2020. Looking at ETH's MVRV, very similar to Bitcoin. That's market cap against average cost basis of all the coins that have moved on chain. And in ETH's case, that cost basis is at or slightly above, at near slightly above, depends on the day, but very close to the market cap. So again, this is an example of where this metric can go awry. In 2019, it dipped in and out of this zone and sort of stayed there the entire time. So we may get an exit out of this metrics low, which effectively people would be celebrating on the bullish side of things. But obviously the caution is we could just trend down here for 2 years, right? Certainly an option. But again, it tells me anyway, that we are closer to a low than a top at this point in time. Flipping gears to technicals for BTC, a lot of the technicals really over the past 6 months, maybe since October, we've really had to zoom out and get a better understanding of what's going on. This is called the power law corridor. Effectively, it's just a line of best fit. And all TA is looking at the left side of the chart, trying to help you determine important levels for the right side of the chart. So this tells us that we do have this bias over time to be rising. We are slowing down over time. And it tells us again, we are probably closer to a bottom than a top. Should this metric behave in a similar way going forward? Past doesn't predict the future. Your mileage may vary. All those important caveats here. But what I'd really like to see is a multi-month period where we're just hugging this bottom zone as we have historically, just building this level on this model for an accumulation type of setup. And if we zoom in on that, effectively the low currently around 13.2. So, a lot of TA is also just if this then that sort of setups. And where my head's at with this is if we break lows, the current local lows around 20,000, important psychological level, we are more likely than not headed to the next important critical level down, which in many ways is around 13,000. And I think it's a bit unfair to consider 13 until we're breaking lows, which may happen very easily, it may not, but we may retest 20 and figure it out from there. But if 20 breaks, I think that's where we're headed. We can also look at other models like moving averages. This is the 2-year MA in the green. This is the 5x multiple of the 2-year MA in the red. The white is just a midline between the two. And again, this does help give you some sense of overbought, oversold conditions, levels that are sensitive to accumulation or distribution or euphoria, or helping align expectations. And we are certainly historically below that 2-year moving average, which in times previous has acted as an accumulation zone. That's really as far as you can take it, because this could stay below this level for 3 months, 6 months. It could be above the 2-year MA tomorrow, right? But again, it does help you align price-wise areas today versus yesterday. Again, if we look at if lower lows happen, right? If this, then that, then guaranteed everyone's looking at horizontals that have been important, or levels that have been important historically. And again, that's 10, that's 12, that's 13, that's any high, any previous area of accumulation, certainly where people will be looking. Alternatively, if we're looking at 50% retracements, Dow theory type of stuff, we're talking somewhere around 33. I'm just focused on the potential downside here because we're so close to that 18 to 20 level. I think it's much easier to be bearish here until we see more signs of some sort of accumulation kick in near that 20K level. trend is your friend until the end. And right now we are deeply trending bearish, as illustrated by the 20-week SMA, this bright red line here. Historically, this has been an excellent gauge at illuminating the bias in price. It also gives you some sense, again, when we are extremely overbought or oversold. Bollinger Bands here are 2 standard deviations above and below that moving average. It looks a little wonky because this is log scale, but 2016, 2017, really the textbook case for just sort of bouncing higher, bouncing higher, bouncing higher. And that certainly is something we could see if we get higher highs into that 20-week moving average. But ultimately, it's more likely than not we are bearish until we are back above that 20-week moving average. Not just for 1 week, really for 2 weeks or more before we can be certain that trend is probably flipped in the opposite direction. And kind of zooming in a little bit, we're also just in this very aggressive trend channel pitchfork here. Pick 3 points gives you a rate of change, gives you some levels of sanity check on the way down. And again, we're sitting at all these interesting levels, the 200-week moving average, the 2017 all-time high, which may again act as an accumulation level, we'll see. But on the upside, again, I'm looking at stuff like the 200-day moving average. I'm looking at the previous accumulation zone between 29 and 32. So very much an if this then that. I think we're very volatile with earnings coming out this week with FOMC and the rate decision this week. We're just going to need time and patience to figure out what's going on here. Flipping gears to ETH, much of the same. A very, very aggressive downward channel that we're still in here. And we've had a series of, we had this failed bullish attempt in April, and then it's just been nothing but down since then. Aside from last week's triple bottom chart pattern, inverted head and shoulders, whatever you want to call it here, where we had a very bullish rally above the 200-week moving average, above the yearly pivot, above the 2018 all-time high, and we're really just ignoring all that again on the way down. So just very, very volatile on lower time frames. But again, I'm still looking at this 2000 level. So as bearish as I might be this week, next week I might come out and say, well, I like 2000. I like 33K for BTC. It really depends on how we react to these psychological levels of 1000 and 20K for BTC. Because right now the trend is definitely bearish. For ETH, those extreme lows that you may hear people talking about, 800 or 400 or 300, right? Really all they're looking at is horizontal levels that have acted as reversals in the past. So ETH is also far below the 20-week moving average, definitely bearish, no question about it. Won't be bullish again until it's back above that level, at least on trend. I mean, if you catch something like this, obviously there are times when it's sideways, you get chopped up, nothing is perfect as it was at the top, right? But the idea is that the technicals will help tell you, hey, you're staying in this till we're below it, right? Through thick and thin, sometimes it's a year plus, sometimes it's a couple weeks, but that's the goal here. So all the same technicals apply for ETH as they would Bitcoin. Everybody's looking at that 20K, 1K, those psychological supports. Very important to see what happens at those levels again, if we get that low. Moving on to DeFi, another way to look at just technicals in the overbought, oversold sense, where's volume historically sat? What do just basic MAs, this is the 50 and the 200, what does that look like? Do we see this spread of MAs kind of as we did in May, just in the opposite direction? Are we at some sort of level that makes sense historically on volume? This is the DeFi perp from FTX. This is a market cap weighted index. So a lot of it's Uniswap or any high market cap DeFi coin, but very clearly has been bearish for many, many months now. And the good thing about something that's very clearly bullish or very clearly bearish based on trend metrics is that it becomes much easier to see when things have turned the corner. It's harder to see when you're in the sideways slop and chop what's going on, but it's much easier to see what's going on once things have been in a trend mode for months and months and months, right? So yes, we're still bearish. Yes, we know the levels here that are important based on these MAs, this VPVR profile, but none of this looks like it's ready to turn the corner just yet, right? MAs are clearly telling you this thing is still pretty bearish. We can look at trend channel on this as well. Again, I'm just picking 3 points. If you don't like these 3, that's fine. You can pick a different 3, but it does give you some sense of within this downward trend, this is oversold, this is overbought. And then when we're above this, that tells you, okay, maybe things have changed, right? Maybe we've turned that corner. So what you'd want to see is prices through this pitchfork with this bullish 5200 cross. That's something definitely to be watching months from now, which I think it's going to take that long. But if we're looking at levels on just this index that have been potentially important, it would be the previous sort of accumulation zone as well as the lows here. So it's a wide range, but it's definitely something to watch. How do prices react? How does the market react at these levels? Should we go lower? And there's kind of 2 extremes of this. There's 1 inch, which is a decentralized exchange or DEX that has a token where it has just continuously sold off. Well, a lot of this is emission related, so just inflation. But this is below its open. It's just continuously sold off in the bear market from a high of 7 to 60 cents. And we can look at other stuff like COMP, which is compound finance, lending and borrowing protocol. They are far below their 2020 low and still bearish, right? None of this stuff on balance relatively has really turned the corner just yet based on trend analysis. And one last thing I just want to mention is obviously dollar strength, which continues even at this level. If we look at Bitcoin's halving dates relative to DXY, Bitcoin has done best when we've seen dollar weakness, not dollar strength. So it makes sense here that we are maybe not connected at the hip correlations wise or inverted correlations wise, but we are fairly sensitive to what's going on with dollar strength. So if the dollar is strong, it is hard to swim against the stream in that regard. That's all here for this one this week. Like, dislike, comment, share, subscribe, and happy trading.